2 months ago, I started this particular challenge where I wanted to create a portfolio from scratch. At that point in time, I think the challenge was trying to help someone which does not have that much of investment experience, and at the same time, starting from scratch, right? And before this, most of the times when I talk a little bit about stocks, it already moved quite significantly, right? This time around, I wanted to maybe start from ground zero, start from zero, right? Start from the very basic, right? And do a little, maybe a little portfolio. And I picked a couple of stocks. And with that, I actually explained why I picked certain stocks, right? So I think at that point in time, we have to remember about a couple of months back. The first thing was there was, I guess, geopolitical tensions, which was happening over in the Middle East and also over in Europe. And for equity investors, typically when there is uncertainties or when there is tensions arising, what will happen is that a lot of equity investors will just get nervous and they would try to shy away from the equity markets, right? So for me, I knew that downside risk and I knew that it was risky to start a portfolio back then. On top of that, there was another thing that was happening, which is the US elections. It could swing either way, right? So there were a lot of uncertainties, right? So, honestly, as an equity investor, especially as a person which is just starting, I always am of the opinion that just start horrible and then improve from then on, right? That is my philosophy. Just start with a very small amount, and just take it from there, right? So what happened was I talked a little bit about 3 stocks which I am looking or which I looked towards investing. You can actually look at the previous episode to see, right? The first one was KPJ. Part of the reasons why is that I like healthcare, right? That's the first reason. Second reason is that no matter the economy, whether it's going up or whether it's going down or whether it's a recession or whether the economy is booming, right? Healthcare is something where the demand is inelastic. If we need to go to a hospital, we just need to go to a hospital no matter what economic cycle we are in, right? If we are sick, we just have to get healthcare, right? Or we need to get medical attention. So for me, KPJ was not only a safe stock, but at the same time, looking at how our society is, getting a bit older, I was of the opinion that it was safe and also it was a growth stock, right? So, and the whole thing of it all, I said the demand is inelastic, and at the same time, there are more and more people over in Malaysia, and our society is getting a bit older. So with that, when people get a bit older, medical attention is probably required, right? That's the first stock which I was looking at. Second stock which I was looking at was Pekat. And one of the reasons why I like Pekat was that it is renewable energy, right? And I was of the opinion, I think when we created the portfolio, it was before the budget. And I knew that the government was looking towards renewable energy and they were focusing towards renewable energy. So I knew this before even the budgets were announced. So when they announced the budget for 2025, we could see a relatively increased amount allocated for the renewable energy sector. The whole thing of it all is that the government right now is going to increase the allocation for their renewable energy roadmap, which is NETR, right? Which is the National Energy Transition Fund, right? That's the first thing. And the second thing is that the government is also giving rebates for those which are moving or trying to get renewable energy, right? As opposed to traditional energy, right? So this was the catalyst for that particular sector. The third sector the third stock which I was looking at is an egg player. And the whole thing of it all is I was of the opinion that egg prices it's getting a little higher, and as egg prices gets a bit more expensive, certain companies will benefit from this, and one of them are the egg players, right? So just let me show you the portfolio real quick so you guys can actually see the overall portfolio. So over here, okay, the title says CC King. Actually, it's the wrong title. It's supposed to say portfolio. But anyway, over here we can look at Lei Hong. I got in Lei Hong at my acquisition price was 37 cents. Right now it's 36.5. So that one I'm sitting a bit of a loss. Next is Pekat. My acquisition price is 83 cents. Right now it's 90 cents as of the time of my recording and my screenshot lah. And the last one is KPJ, right? We can see that KPJ was 193 versus the market price of 2 ringgit 33 cents, right? The market price. So I think overall, just want to show you the overall. I'm sitting on a gain of 13%. Let me try to focus it for you guys. Okay, so that's the first thing. So anyway, basically, there was a question on in terms of weightage. You know, how much would I weight all these stocks, right? So I am a relatively conservative investor, right? So I'm putting more weightage in healthcare. Like I said, healthcare is inelastic. At the same time, it offers a little bit of growth, and I like this particular stock. So 40% in terms of healthcare. And then next is Pekat, 30%. This is my growth stock, right? As I mentioned, the government is moving towards renewable energy. So I'm putting 30% in terms of allocation. And the last is eggs, right? As long as Malaysians, they like to eat eggs, the demand for me is inelastic. No matter what the price, I still see a fair bit of Malaysians actually consuming eggs. So that's the second column, sorry. So in terms of weightages, the third column is the gains and losses. So over here, we can see that KPJ, in terms of gains, is about 20%. Pekat gains is about 8%. And Lei Hong sits at negative, as I mentioned. My acquisition price is higher than the stock price right now, right? So I'm actually sitting at a loss. Overall, the last column, you can see that the weighted returns for KPJ, it's 8%. Pekat is 2%. And Lei Hong is negative 0.5%. Weighted lah. So what I did was I took 40%, multiplied by the gains, and then I get the weighted returns for KPJ. And then Pekat, I take 30%, multiply by 8% gains, I get 2.43. Overall, I'm actually sitting at a gain of 10.17%. Right? I don't know whether you guys can see 10.17, right? So let me just let it rest for right now. Okay. So I think overall, the reason why I actually did this particular challenge was to reach 10%, right? I wanted to get better returns from a lot of traditional assets lah, right? A lot of our ASBs and our Tabung Hajis, I think they give about, between 3 to 5%, I think, if not mistaken. So that's one of the reasons why if I were to invest in equities, I need to get better returns, right? And I think 10%, which is a bit of almost double. It's not really double. Almost double is actually not bad returns, especially for equities, right? That's the first learning point, right? If you want to invest on your own, right? If you want to buy single stocks, you have to make sure that the returns is much better than your safe assets. If your returns is as much as your safe assets, I highly maybe suggest not to go into single stocks. The whole thing of it all is we are taking more risk, and when we take more risk, we need to get more returns, right? But if we take more risk and the returns is the same as our safe assets, right? I think we should try to aim for better returns lah. So my aim during the previous episode when I wanted to construct the portfolio was 10%. And I gave myself a 1 year challenge. I think I guess, achieved that particular task in 2 months. And if any of you guys have invested, please put it down in the comment section, right? That's the first thing, right? The first learning outcome. Second learning outcome is that, some stocks, they just remain flat. Let me show you a couple of stocks which remain flat, right? Okay, over here. I know if you're looking at the egg player, right? All right. So most of my stocks, if you notice, like this is CCK. I invested in this maybe last year, if you've been following me, right? And for the longest time, it's been flat. And then after that, it just moved up, right? And that is the nature if you invest in, I guess, small cap stocks. And I'll explain why. Even Pekat, for the longest time, flat. And then after that, it shot up. You see that? So if the stock isn't moving, for me, especially for my egg player, which is Lei Hong, I'm not too worried. The whole thing of it all is, number one, I'm sitting on an overall gain. Number two, for me, for the longest time, most of my investments will just go flat, and then it will shoot up, flat, and then it will shoot up, right? You guys notice that? So, and I think as an as a fundamental analyst, right? We have been taught this one particular thing. When we invest in a business, if tomorrow I invest maybe 100 ringgit, right? And this is like the best phone making company I'm investing in, right? And so happen for the money to actually buy a new machine, for the R&D to happen, for the money to actually give better returns, right? It will take a certain gestation period, or it will take a certain amount of time before that money is converted into better profits, right? It takes time, it takes experience, and also it takes it takes time and it takes experience for the business to eventually move up in terms of profitability. And once the company moves up in profitability, that's where the company would hopefully increase in the stock price lah. So I think, long story short, what I'm basically trying to say is that, should you want to embark into investing, or starting your own portfolio, or starting investing in small cap stocks, or starting investing in the stock market as a retail investor, always know that you are embarking on higher risk as opposed to investing in your unit trust, or as opposed to investing in your tabung haji or your ASB, right? Always know you're taking more risk. And if you're taking more risk, please aim for better returns lah, right? Aim for maybe 10 or maybe 15% returns, right? And please give yourself a buffer of time, right? Even for this challenge, I wanted to make it 2 years in order for me to reach 10%, right? The whole thing of it all, I was nervous, I mean, I did not want to make a public episode, or I did not want to make an episode over on YouTube, announce what stocks I'm investing in, and then after that, I don't reach the target, right? So that's one of the reasons why I came up with a challenge. I think 10% in 1 year. So I actually achieved it in 1 month. No, in 2 or 3 months, right? So